Hello everyone, welcome back to the CFP video learning. In the last video, we've already discussed what is time value of money, what is compounding, discounting, how does simple and compound interest work. We've also discussed about the value of money increasing and decreasing because of interest rate and inflation respectively. In this video, we are going to try and understand further more details about time value of money, particularly terminologies. All those terminologies that are going to help you to solve a couple of questions. How exactly do you find out how much should you invest? How do you find out what will be your requirement in the future for the goals? Financial planning is something which is a very comprehensive topic. In the financial planning part, there is one very important part which is financial mathematics. So when you are planning somebody's finances, when you're trying to help them achieve their financial goals, you should know that what is the amount that they will need when the goal will arise. Let's say, for example, I give you a case that there is a 30-year-old person and this 30-year-old person has a goal of, let's say, retiring at 60. Let's say has a goal of accumulating at 35 2 crore rupees to buy a house. Now, if I want to plan for this 30-year-old based on these two goals, of course, financial planning is not only planning for goals. It is much more elaborated and there are a lot of things that you're going to learn slowly and gradually. Talking about financial mathematics over here, which is not math per se, but hear me out. So let's say you want to find out that after 5 years, that is at the age of 35, this person is going to require 2 crore rupees. Now, will this 2 crore be available to him at that time? How will it be available to him? How will he be able to withdraw it? For him to be able to withdraw it, he will have to start investing something from now. Does he already have some investments? Okay, good. What extra would he have to invest now? So trying and calculating from 30 to 35, let's say for these 5 years, what is the amount that should be invested so that we are able to reach 2 crore? That is one scenario. Scenario with the client could also be that they want to find out that if they are doing a mutual fund SIP of, let's say, 10,000 a month. 10,000 a month. How much will they accumulate after, let's say, 10 years, 20 years, 30 years? So if a person wants to find out whatever I'm investing out of that, what is the worth of that money after a couple of years? How much will I be able to withdraw? If I want to find out how much will I be able to withdraw, if I want to find out how much should I invest from now onwards, for all these financial goals, time value of money terminologies are going to help you. So these terminologies that we are going to discuss are the terminologies which are available in the calculator and in Excel sheet both, where you will use them in the formulas. So we are going to learn these couple of terminologies in this video and couple of more in the upcoming ones. So starting with the very first terminology, which is called as PV. PV is nothing but present value. Now, what is this present value? Like the name obviously says, present value is today's value. What is the amount that you're going to either receive today, or you're going to pay today, or you're going to invest today? Okay, for example, let's say you have taken a loan of rupees 15 lakhs today. That's your present value. Let's say you are investing in FD. This was, you've taken a loan, right? So that's debt. But this is your asset investment. Let's say you are investing in an FD 5 lakhs today. Again, that's your present value. Today, whatever amount that you have or you are paying or you're going to receive or you're going to invest, all of that is termed as your present value. Again, like the name says, it is in the present, and which is why there is one particular nature that it has. It is the current value. It's the current value. And it is a one-time value or a lump sum value. So for example, you are investing in an FD lump sum 5 lakhs is your PV. But let's say if I'm investing as in a recurring deposit, let's say I'm investing regularly 5,000 a month. Is that my PV? The answer is no. Let's say I'm investing in a mutual fund 1 lakh rupees as a lump sum today. Yes, that is my PV. But I'm investing in mutual funds. I'm investing, let's say, 2,000 a month. Is that my PV? It's not my PV because it's a recurring amount. It's not a lump sum or a one-time value. It's a recurring amount, 2,000 per month. That is as my SIP, and which is a recurring amount, and that's why it's not termed as PV. In math language, here in financial mathematics, present value is a one-time value which is a lump sum amount. It is not a recurring amount. That is the most important thing about PV. The second important thing about PV is, like I said, it can be something that you've received, it can be something that you're paying, it also can be something that you're investing. Okay, for example, let's say you are receiving a hefty commission this year or bonus this year because you've done very good in your work. Let's say you're getting a commission of, let's say, 3 lakhs. That 3 lakhs is your PV. That is something that you've received. At the same time, let's say you are going to pay, let's say, a huge amount of debt, repaying the huge amount of debt that you had. Okay, you're not repaying through EMI. Let's say you've taken a debt from your friend, a loan from your friend. You've taken, let's say, 5 lakh worth loan from your friend, and now you're going to repay that loan to him. Entire 5 lakh together. When you are repaying that 5 lakh today, again it's a present value. So it can be anything, something that you're paying, something that you're receiving, it can be any of it. But how will the calculator or Excel sheet understand whether the present value is the money that I've received or the money that I've paid? Because if I'm receiving, it is going to be a positive for me, right? But if I'm going to pay it, it is definitely going to be a negative for me, right? Because my assets are reducing or the cash flow is reducing. So the calculator and Excel sheet should be understanding whether it is whether it's a receipt or whether it is a payment, right? How does the calculator Excel sheet understand that? If the money is coming in, for example, I am taking a loan, 15 lakh rupees is coming in my hand, coming to my pocket. That is called as money coming in. Yes, it's a loan, but I'm going to repay it in the future, right? Not today. I'm not repaying it today. I'm taking the loan today. So I'm getting the money today. So the money that I'm getting today, that will be a positive present value. A plus sign is what we will denote to this 15 lakhs. Either no sign at all, right? So if you have to write it, write 15 lakhs in the calculator or in Excel sheet, you will just write 15 lakhs. Or you can put a positive sign plus 15 lakhs. That is what is your present value when it is received. Something that you are paying or investing. For example, let's say you are investing in this example FD 5 lakhs. When you are investing in an FD, the money from your pocket is going to the bank's pocket. So the money is going out of your pocket and it's going to the bank, and precisely that's why you will consider the money to be going out of your pocket. When you are investing or you are spending on some expense, money goes out of your pocket, and that's why you have to denote the negative sign. So either you put a positive sign or a negative depending on whether the money is received or paid. If the money is coming in, you put a positive sign. If the money is going out, you put a negative sign. To give you more examples for positive, negative, let's say for example, I am receiving a commission, like I said, of 5 lakhs. I'm receiving it, it will be positive or no sign at all, right? Plus or no sign. But let's say I am supposed to purchase an iPhone today and the iPhone is worth 1,20,000 today. I'm paying this 1,20,000 to get the iPhone. So the money is going out of my pocket, and that's why I'll put a minus sign. Minus 1,20,000. So that is how we term present value. It's a current value, a lump sum value. Put a positive sign if the money is coming in. Put a negative sign if the money is going out. That's it. That's called a present value. Moving on further to the next terminology. If you want to write this down, you all can pause for a moment, make a note, and then you can again resume, wherein you will further learn about future value. So let's start with the future value. Like present value is current value. Future value is future's value, right? As simple as that. So future value is FV, and yes, it is actually that simple. Future value is the value that you will need in the future, the value of money or the worth of money in the future. Today, let's say today, there is a house which values at 50 lakhs. But this is the value of the house today. This is the worth of the house today. If that's the worth of the house today, this will be your present value. But let's say after 2 years or after 3 years, let's say in 2027, after 3 years, let's say from 50 lakhs, the value or the worth of the house increases to 60 lakhs. So when you are sitting at 2024 today, for you the value is 50 lakhs today. But if you go to think that after 3 years, what will the value be of this particular house? Let's say if I don't want to buy this house today, I want to buy this house after 3 years in 2027. At that time, what will I have to pay? If you are calculating that, or if it is given to you, if the value of or the amount is already given to you, let's say 60 lakhs. 60 lakhs is what you will have to pay after 3 years if you want to buy it. So today the amount is 50 lakhs, but in the future, the amount will be 60 lakhs. And that's what is your future value. So future value is again a lump sum value. It's again a lump sum value or a one-time value, like your present value. And similarly, like it states, like we already discussed about the signs, whether the money is coming in or going out. So if the money is coming in or if the money is going out, based on that, your positive negative sign impacts here as well. If the money is coming in the future, positive. So for example, this 1,20,000 or let's say this 5 lakhs that I'm investing in FD, this 5 lakh that I'm investing in FD is a negative sign because money from my pocket will go out to the bank. So if the 5 lakh is positive today, let's say I invested in 2024. Now let's say in 2026, I want to withdraw from my FD. It's a 2-year FD. And I want to withdraw from my FD. Okay, let's say this 5 lakh, meanwhile, let's say becomes 6 lakhs. So in 2026 in the future, when I will be withdrawing it, the amount will be 6 lakhs, which will be my future value. Today I am investing 5 lakhs, it's my present value. What will this 5 lakh become after 2 years? It will become 6 lakhs, that's my future value. I am investing 5 lakh, money going out of my pocket, so minus 5 lakh. 6 lakh will be withdrawn. So from bank, money will come to me. And that's why 6 lakhs will be positive. Positive 6 lakhs. Or no sign at all. Right? One and the same. So when it comes to future value, again the logic of positive negative remains the same. If you are going to pay or invest or repay something, negative sign, the money going out of your pocket. Receiving any money, positive sign. So that is about your present value and your future value. So future value is of course the future's value. It is again not a recurring cash flow. Let's say for example, you're going to receive pension every year after retirement or every month. Today you are just sitting at age 30 and you think 60 ke baad, after 60, I'm regularly gonna get pension. Is that pension amount my future value? Answer is no. It is not your future value because future value is not a recurring amount. Pension is a recurring amount. So it's not a recurring amount. It's a lump sum amount. That is what is your future value. So the example that we are discussing right now is FD. Minus 5 lakh is what I am investing. So this 5 lakh is my present value. Today I am sitting at 0. Always today is year 0. Next year is your year 1. Today is not your year 1. Today is year 0. Next year is your year 1. The next year of that is your year 2. This is how a number line or a timeline is created. So today at 0 I am investing 5 lakhs, so minus 5 lakhs. Okay. After 1 year nothing. After 2 years I am going to receive 6 lakhs. This 6 lakh that I am going to receive is going to be my future value if I am sitting at 0 today. At year 0 today, 5 lakh is my current value, which is my present value for me. And today, for me, if I want to understand that how much will I get after 2 years? So for me today, 6 lakhs is the future price or the future value of money. So in this example, we've understood FD mein, or when we are investing in FD, there is a minus sign. When we are investing, my present value is negative. I am receiving my future value and that's why it is going to be positive. 2 more terminologies I will explain you with this example itself. Obviously, there is going to be some time period. First was PV, second was future value, and third terminology is NPER for this video. NPER stands for number of years? No. It stands for number of payment periods. What does this payment period mean? I'm going to discuss that with you in the next video. As of now, number of payment periods means what? Total number of payments or total number of years of your investment. What is the total period? So as of now for you, yes, it is number of years. But does it actually mean number of years? The answer is no. And that's something that we're going to learn in the next video. So let's keep it for the next one. As of now, NPER means number of years. NPER or N. It stands for number of years. So again, in this example of FD, 2 years is my total period for which I am investing. So NPER here is 2. Let's say if the question is about a loan. Let's say if it's a 15 years loan. 15 years here, 15 is my NPER. Let's say the amount of loan that I'm taking today is 20 lakhs. Then 20 lakh should be positive. Money coming in. And this is my present value. So present value is always written down at year 0 on the timeline. So you make a timeline like this. At 0, you write your present value. At the period end, you write your future value, if any. That's how a timeline is created. So you have a PV, you have your FV, you have your NPER. Only one thing missing is, in this example, 5 lakh became 6 lakhs. How? So 5 lakh became 6 lakhs because of the interest rate of FD. So whatever the interest rate of FD is, let's say 6%, that 6% is my rate or I. So the fourth terminology is rate or I. This is return, that is rate of return. It can be interest rate. It can be inflation as well. Of course, inflation we all know now what it is. Return and interest, aren't these two the same or are these two different? So interest is majorly used for debt instruments. When you're talking about debt instruments like your FD, like debt mutual funds, like bonds, like loan. We talk about returns when we are majorly talking about growth assets. For example, what is the return that you're getting in the stock market, in the mutual fund? What is the return that the real estate is providing? So growth assets majorly are termed or are used returns. For growth assets, whatever returns you have are called returns. And for debt, majorly it is called as interest rate. So return is usually volatile. Interest is sometimes fixed, sometimes variable. And inflation is always, variable. You're going to learn about more kind of returns, interest rates, etc. in your further modules. So as of now, there are these 4 terminologies. Let's say the loan is at a rate of 8%. Then 8% becomes my rate or I. Now using these 4 terminologies, there could be questions like, let's say you are already given what is the present value, you are given NPER and rate. Okay, for example, let's say you are given today the value of the car is 5 lakhs. After 5 years, I would want to buy a similar car, but of course there will be technological changes, and that's why the price of the car from 5 might go to 7 lakhs. So let's say I'm supposed to calculate, today the price of the car is 5 lakhs. The inflation applied to the car is 5%. What will be the value of this car after 5 years? That's what is called as future value. So you could be asked to calculate future value. You would be given PV. You might be asked to calculate present value and you would be given future value. That's how the sums will be created. Let's solve a couple of them so that you get more clarity. You're going to solve each and every question in Calci as well as Excel sheet. So let's do it. So let's start solving the very first question. So this is the file wherein there are all the questions. This file is already uploaded on the LMS portal, which you would have the access to. Wherein do you have to go and download this? I'm just showing it to you right away. Just have a look at it and download it. So you have logged into your Seek LMS portal. Once you have logged in, what you will see is My Courses at the left. Click on that. Once you click on that, you will see Category. Click on the category and click on CFP. So type CFP and then just click on CFP. You will see multiple things over here. What you're looking for is CFP LA Intro Librarian Assessment. What is important? CFP, Librarian Assessment, FPSB Introduction. Click on that. A course opens up. You go to Modules. You go to Introduction to Basics. And then you click on this Introduction module. The same file opens up. You download that file. Or rather, if you're not able to download it, just use it from here. I'm also going to use an Excel sheet to solve all the questions. Where is that Excel sheet uploaded? In modules, it's the PDF that is uploaded. In resources section, you will see Introduction Module Solutions. You download that file and the same Excel sheet will open up. So that's how you're going to use the PDF and the Excel sheet both. Now let's try and start solving. So the very first question says, if you invest rupees 10,000 today at a compound interest of 10%, what will be its future value after 10 years? So here, whatever question you have, as simple the question is, never mind, draw a timeline. Whether the question is easy or difficult, timeline is mandatory. You draw a timeline, put all these details on the timeline. If you invest rupees 10,000 today at a compound interest of 10% per annum, what will be its future value after 10 years? So you are investing how much? 10,000 today. So what is this 10,000 today? Today means year 0. What is this 10,000? 10,000 is the present value which you are investing. If you are investing, the money goes out of your pocket. So minus 10,000 at a compound interest of 10%. So you write 10% as your rate above your timeline. What will be its future value after 10 years? after 10 years, you write your 10 year at the end of the timeline, you have to calculate what will be the future value. Simple. We will do this question in the Excel sheet as well as the calculator. First, let's do it on the calculator. Which calculator are we supposed to use? As we all know, we are supposed to use Casio FC200V. Use this calculator and solve all your questions. Now, when you go to this calculator, there are a couple of terminologies that you will see. How does your calculator look like? Let's have a look. This is how your calci will look like. Okay. But since on the calculator we can't really see or follow the inputs over here, I'm going to display the actual calculator to you via my video. So in the video you will be able to see exactly how in the calculator you are supposed to put inputs. So let's go to the calculator and see it. Okay, I hope you are now able to see the calculator. On the calculator, you see there is something called a CMPD function. You see CMPD function. Now here, you click on the on button first of the calci. First, you switch on your calculator. Once you switch on your calculator, there is this function called as CMPD. You go to the CMPD, click on CMPD. Once you click on CMPD, you will see all these inputs or terminologies over here. The very first thing that you would see here is set. There is something called as set. But we've not discussed what set is yet. And that's why we will ignore it. Set, begin, end. Whatever is mentioned, just ignore it. Using this cursor key, come down. Once you come down, you see something called as N per or N. Now look at the timeline. Looking at the timeline, you come to know that N is 10. So use this 10 or just apply this 10 as period in your N in the calci. How do you do that? So there are number keys right here. Using these number keys, you type 1 and 0. Okay, how do you do it? You type 1 and 0. Once you do that, the last button of your calculator is called as execute. It's like your enter of the keyboard. Click on execute. Once you type in any of the cell of the calculator, type or press execute. Once you press execute, automatically this gray color or the blue color, whatever you want to call it, this highlighter that you see automatically comes from, it was on N, from N it comes down to I directly. Now what is the I given in the question? Looking at the timeline on the screen please, its R is 10%. I or R one and the same. It is 10%. So 10% is what you will again use your number keys and type. So 1 and 0. 1 and 0 and you press execute. Now you will see you are on present value. So what is the present value? Minus 10,000. You see minus 10,000. So here again you have number keys and you have plus minus signs also. Use the minus sign first and then type 10,000. So here is the minus sign. You click on the minus sign. Then you type 10,000. So 1 and 4 zeros and press execute. Present value again has 10,000. So after you've put the present value, when you press execute, you are on something called as PMT. But we've not discussed this yet. And that's why we will just go down with the cursor key. PMT is supposed to be 0. As of now, we've not discussed it. Because we've not discussed it, we'll keep it 0. Moving on further, there is future value. Whatever you want to calculate, always has to be 0. So future value has to be 0. So 0 and then you can press execute. Below future value, there is something called as P by Y and C by Y. But we've not discussed this P by Y, C by Y yet. So P by Y and C by Y for us have to remain 1. So again you have to type 1 and press execute. Same goes for C by Y. You press 1 and press execute. After you've done all the inputs in your calculator, you go back to the future value, and once you are on your future value, once the highlighter, using this cursor you go up and down. Once the highlighter is on the future value, you click on the button solve, the blue button of your calculator. Click on the button solve. Once you click it, you will see the answer has come up as 25,937. And that's your answer. This is how you use the calculator. The answer here is 25,937. I hope the calculator is easy. You all can pause it. Just rewind if you want to try on your own. Right? Pause. Try it on your own on the calculator and then solve the sums further. Please pause here, solve it on your calci, note this question timeline down, and then once you've got 25,937, go ahead and play, meaning resume the video. Now let's say if you have already resumed, I'm assuming, let's see how to do this sum on the Excel sheet. So what I've already done here is, I've already created an Excel sheet, okay, wherein I'm going to show you the inputs, bits and bits on the Calci and Excel both. I've already shown you how to use things on the Calci now. But because it is your very first time, I'm going to show you on this Excel sheet again. You had all these inputs in your calculator, set, NPER, I, PV, PMT, etc. What we did is we ignored the set. If the set is begin or end does not matter to us right now. We've not discussed what set is at all. We'll discuss it in the next video. What is NPER? So we already discussed NPER or N is nothing but your period, which we know was 10. So we typed 10. Whenever you type in calculator, you have to press execute button. After typing, press the execute button. So automatically you will come on rate. Rate is 10. You don't need to put percentage sign. Automatically the calculator will capture. So in Calci you don't need to put percentage sign. Type 10 and then press the button execute on the calculator. Easy. Next is PV. Put a minus sign, type 10,000 in the calculator. Click on execute. So these are your calculator inputs that I'm just trying to show it to you how it is to be done. I'm going to show you on Excel sheet as well the entire solution. PMT we've not discussed, so keep it 0 and ignore as of now. Then you have future value which you're supposed to calculate. So in Excel sheet we have a formula. Here when you want to calculate future value it has to be 0. Then you press execute. P by Y has to be 1, C by Y has to be 1. P by Y 1 execute, C by Y 1 execute. Do we know what is P by Y, C by Y now? Just trust me, right now we don't need to know it. Like I said, in the next video I'm going to teach all that as well. So wait by that time, okay? Right now it's not important for you. You have to go and solve FV in your calculator using those cursor keys which are there in the middle. These ones. Use those, go up to future value and click on the button solve when your highlighter is on the future value. And you will get the answer as 25,937. So this is how you solve on the calculator. Now let's do it on the Excel sheet. In Excel sheet as well, I have already mentioned set, NPER, I, rate, PV, PMT, FV. In Excel sheet, there is nothing called as P by Y, C by Y. You don't have P by Y, C by Y in Excel. We don't know what P by Y, C by Y is yet, but it is something that is there in Calci and it is not there in Excel. So as of now, anyway, you don't need it. You have to ignore it. Set can be begin or end, whatsoever, doesn't matter right now. We are going to learn that in next video. NPER. What is the NPER? NPER in the question given to us was 10 years. In the Excel sheet, you type 10 in this cell and click on the button enter. I'm teaching Excel sheet from very basic, like from scratch. If you're somebody who already used Excel, it's okay. This might be a little slow for you. But then I want to make sure everybody else watching the video understands. So what am I doing here? People who are using Excel for the very first time. You see all these boxes. These are called cells. These are called cells on the Excel sheet. This name of this particular cell where I've written cells is column K and row 16. So column K and row 16 called as K16. This is how the Excel sheet is read. K16. This is the name of the cell. So each and every Excel sheet has all these cells. I've just created a random table. How did I do it? I just gave a heading as Excel. Then I mentioned or typed here set. Then I typed here NPER, I rate, and as on fourth, I have just mentioned everything. I've just typed it all. And now I'm going to create a table out of it. I'm going to select from Excel till FV and then just take it to the right. Now I select all this and I can create a border. Here in the font, in the home tab, there is the section font. Here you have borders. Click on all borders or outside borders. Once you click on outside borders, a box is automatically created. This is how you create a box on Excel sheet. Okay. With practice, you will be able to do it if you've never done it before. What is next? In Excel sheet, again, I need to put the rate 10%. But in Excel sheet, you don't just type 10, you have to put the percentage sign. In calculator, only 10 is okay. But in Excel sheet, you have to put 10 particularly, 10 percentage. Then it is PV minus sign and then 10,000. Remember, money is going out of the pocket. You are investing 10,000, money is going out of the pocket. You have to find out if you invest 10,000 today. If you invest 10,000 today, look at this timeline. After 10 years, how much will be accumulated? So calculator told you 25,000 will be accumulated approximate. Let's see whether you get same on the Excel sheet or not. Right? So if you invest 10,000 today, that's why negative. PMT, we have to ignore 0. In Excel sheet, there is a formula for calculating future value, which is very easy. The formula is FV. But any formula you type in Excel sheet, even if you want to do 1 plus 1, we know it's equal to 2, but just giving you an example, even if you want to do 1 plus 1, you have to first put an equal to sign before typing any formula or calculation. So you put an equal to sign, click on 1 plus 1 and then enter. Then you will get the total as 2. If you just directly type 1 plus 1 and if you don't put equal to, it will not calculate only. The Excel will not calculate. You have to first type equal to, then do 1 plus 1, it will calculate. So, we have to use the formula called as equal to F for future, V for value. Future value. You see here FV, which is in blue. Double click on that. Once you double click, Excel sheet will open up a formula tab. Use this particular formula or guidance and keep on linking the cells. When I say linking, the rate is 10%. So you could directly type 10%, but never do that. We've already written 10% over here in the cell H18 or rather 19 because it is rate. So in H19, right? H19, we've already written 10%. Just click on this H19. click on this 10%. Automatically you will see a moving line across this 10%. If you put a comma, that moving line stops. That means this cell has now been selected as rate. So rate is 10%. Always link things in Excel. Link the cell. If I have written H19 here in the future value formula for rate, that means for rate I have linked the cell of 10%. Always link it. I will tell you why once we are done with this sum. Next is N per, which is 10. So go and click on N per. Put a comma. Next, Excel sheet is asking you PMTC here. What is PMT? It's 0 as of now. Select 0 and put a comma. Then you see present value, it is minus 10,000. Click on minus 10,000. H20 that is. And then put a comma. Now you see something called as type. End of period, begin of period. We don't know what this means yet. We've not learnt it. Just double click on beginning, double click on beginning, or double click on end, whatever it is. And then just close the bracket, enter. You get the exact same answer like your calculator, that is 25,937. You should get the exact answer. Which means that if you invest 10,000 today, after 10 years, you will be able to accumulate 25,937 if your rate of return is 10% on this investment. This is how you solve the sum on the calculator and the Excel sheet. I hope that is clear to everybody. If there are any doubt, just watch this again and then reach out to the doubt solving team so that they can help you clear your doubt. This is how a sum is solved in Calci and Excel. Draw a timeline. Then I have shown you how to do it on Calci and how to do it on Excel. In the exam, you will not have Excel as such. You will have spreadsheet if you are giving the exam home proctored and if you are giving the exam in the center of NSC. NSC center will have something called as Open Office software, which is very similar to the Excel sheet. Practice on this Open Office. How to use this Open Office? There is a separate video altogether on that. Go and watch that in the LMS portal. You will not be allowed to use paper and pen most of the times. So don't make a habit of just drawing through paper and pen and making a timeline. Draw the timeline in the spreadsheet or Excel sheet or Open Office itself. That will be easier. Okay, moving forward to the next question. Now before I go to the next question, just remember the process. Draw a timeline first. Once you've drawn the timeline, solve it in Calci, solve it in Excel. Be comfortable with both. Learn both. Practically, you will use Excel sheet. And in exam, Calci is really useful. It's helpful. Unless the question is very lengthy, which is rare. Now what I want you to do is, pause here, read question 2. After reading, try and solve it by yourself. And then listen to my explanation and see whether you are able to solve it or not on the Calci and Excel. So let's do this question number 2 now. Now let's come to question number 2. So the next question says, what is the future value of rupees 80,000 in the next 12 years at a compounding of 11%? First things first, we go and draw a timeline. Question 2. What is the future value? So you again have to calculate the future value of rupees 80,000. So of rupees 80,000 in the next 12 years means if you are investing 80 today, what is the future value of this 80? So what is your 80,000? It's your current value that you are investing. That's why negative 80,000. In the next 12 years, so today we are at 0. In the next 12 years, what is the future value? At a compounding of 11%. So rate is 11%. Now how do I calculate this in the calculator? 80,000 is invested today at a rate of 11% for 12 years. We need to calculate the future value. So again, we need to go to our calculator in the CMPD function. once you are in your CMPD function, you will be able to see all these inputs. Now I'm not going to show the calci again because I've already shown it, but I'm doing these inputs here for you. Here on the left hand side are all calculator inputs. I'm trying to show you how the calculator looks like. What input do you have to do there, right? So first of all, set, begin or end, whatever is mentioned in there doesn't matter. We've not discussed what set is yet. So ignore it, okay? Just press execute or just come down through the cursor key which is there here in the middle, okay? Then is N. What is N? How many years are we investing for? We're investing for 12 years. So N is 12. What is the I? I is 11%. 11, execute. Then present value. Present value is minus 80,000. So from the below number keys, you need to put a minus sign. And then you need to write 80,000 in the present value in the calci. And once you've typed it, press execute. Press the button execute. Then you will already be on PMT, which again you don't know what PMT is. You don't know what PMT is, keep it as it is 0 and press execute. Keep it 0 and press execute. I'll tell you what PMT is in the next video like I said. Next is future value which you have to calculate. Whatever you have to calculate, keep 0 and press execute. P by Y, C by Y 1, execute, C by Y 1, execute. We already know that. Now future value, go to the future value using the cursor key in between. Go to the future value, highlighter should be on the future value and you have to click on the button solve. When you click on the button solve, you get the answer as 2,79,876. That's how you do it on the calci and I hope everybody is getting the same. Just check these inputs in the calci. Have you written exactly same? Everything is same. FE should be 0 and rest everything should be same. 12, 11, minus 80. And you will get the same answer. Now let's do it on the Excel sheet. Again on Excel I have just created this table. Okay. So that we save time. Set again here can be begin or end. As of now does not matter. We'll discuss it in the next video. NPER is given as 12 years. Click on 12 and press enter key. Rate given is 11. Put a percentage sign. Put a percentage sign. And then click on enter key. Present value is minus 80,000. So put a minus 80. Click on the enter. PMT 0. We don't know what PMT is yet. Click on 0 and click on enter key. Future value we need to calculate. What is the formula? Equal to FV. Double click. What is the rate? Like the formula is suggesting, first select the rate. So rate is 11%. Put a comma. Then you select the NPER. You've selected NPER 12. If you don't put a comma and if you directly go to select PMT, NPER will change. NPER this 12 will not be blocked. So you go to NPER, click on 12 and then put a comma. Then PMT has to be 0. Select, put a comma. Present value is minus 80. So just go to present value, select minus 80. Put a comma. Then you can select anything, end of the period or begin. So double click on begin and close the bracket and enter. You get again the exact same answer, 2,79,876. This is how you do it on the Excel sheet. I hope the question 2 is very clear. If the question 1 and 2 is clear, just pause for a second and try and do this question 2 again on calci and Excel sheet and then go ahead. First, solve this question second by yourself now. Solve it on calci and Excel sheet and then go ahead, resume the video and then watch further, where now we are going to do question 3. So what is the question 3? What is the present value of rupees 10,000 receivable after 6 years if the rate of discount is 10%. First of all, you see rate of discount. Okay. What is the present value? We have to calculate something different here. We go and create a timeline first. Question 3. We are at 0 today. So the question says, what is the present value of rupees 10,000 receivable after 6 years? So we have to calculate PV, but what is this 10,000? 10,000 is receivable after 6 years. So in the future, you will get 10,000. You will receive 10,000, so it's the future value. So future value is 10,000. You will receive after 6 years, which is your N per. If the rate of discount is 10%, what is the present value? So we need to calculate the present value over here. What is the present value? In order to calculate the present value, it's the same logic like we were calculating the PV or rather FV in the Excel sheet or calculator. The same logic. Let's go to the Calc first. In the calculator, you have FC200V, set, begin or end doesn't matter like we discussed. We don't know what it is yet. N. N is 6 years, so type 6 and press execute. I given to you is 10%, same thing, type 10, press execute. In this question, you have to calculate the PV, you're not given the PV. Because you have to calculate the PV, PV has to be 0 right now in the Calc. And then you press execute. You don't know what PMT is, we've not learnt it yet. Put 0 and press execute. What is the future value? Future value given to us is 10,000 you will receive after 6 years. So type 10,000. Will 10,000 be positive or negative? Positive, because you will receive 10,000 after 6 years. Then P by Y is 1, execute, C by Y 1, execute. We'll discuss later about P by Y, C by Y. Just follow my instructions right now. So you have to calculate present value here. So your cursor now should go to PV. The highlighter that you have, which was going to the future value, and then you were pressing the button solve. The highlighter now should go to PV. So you need to go to the CMPD, and this highlighter that you have, has to go to PV. So PV, once the highlighter is on PV, and then you click on the button solve, the blue button of the Calc. Then you click on the button solve. When you click on the button solve, you get the answer as 5,645. Which means if you invest 5,645 today and you see the answer has come as negative 5,645. Why? Because the Calc knows the math language. That if 10,000 will be received in future, today I will invest something. That's what it is doing. So minus 5645 is what I invest today at 10%. So after 6 years, the value almost doubles, which is 10,000. I hope it is absolutely clear in the calculator. Let's go to the Excel sheet and solve it in the Excel now. In the Excel sheet again, set or type can be anything, repeating the same. N per given to us is 6 years. Observe, whenever I am putting any input, I am first going to the timeline and checking it. Rate given is 10%. Remember, in Excel sheet you need to type 10 and then you need to put a percentage sign. Otherwise it will not capture correct. Present value you need to calculate. So moving on, what is the PMT 0? We've not discussed it yet. Future value given to us is 10,000 after 6 years. So 10,000 is what you will type and click on enter. This time you go to PV. Go to PV. The formula for PV is equal to PV. P for present, V for value, PV. Double click on that, equal to PV, and then double click on the formula. It asks for rate first, which is 10%. Then it is asking for N per, which is 6. Then PMT, which is 0. Future value being 10,000, just select 10,000, comma, and then you can take begin or end, whatever you want. Close the bracket and enter. Exact same answer, 5,645. So whatever you have to solve, the formula is there in the Excel sheet. For future value, it was equal to FV. For present value, it is equal to PV. Since we've solved this question 3, I would want you all to try the question 3 again right now. Just pause and try it again so that you are very clear with it. And then we now move on to question number 4. So the question 4 reads as, how many years approximately will it take for a sum of rupees 10,000 to quadruple if the rate of return is 9%? So how many years will it take? The question here is not to calculate PV or FV, but to calculate the period. How many years will it take is what we have to calculate. So making a timeline. Question 4. How many years will it take? So 0 and your n equals to a question mark. Will it take for a sum of rupees 10,000 to quadruple? 10,000 if you invest, how much time will it take for it to quadruple? What does it mean when I say quadruple? Double, triple, quadruple. Okay, so 2 times, 3 times, 4 times. So how much time will it take for your 10,000 to become its 4 times, that is 40,000, if the rate of return is 9%. So if the rate of return is 9%, if you invest 10,000 today, how much time will it take for this 10 to become in the future 40,000? When will it become 40 is the question. Same thing, go to the calci first. And let's start solving. So you put all your inputs. Set can be begin or end. N, like we know, we have to calculate to put 0 and execute. I, as given, is 9% in question 4. So 9. Present value is minus 10,000. PMT is 0. 40,000 is the future value. P by Y, C by Y remain 1 because we've not discussed it yet. Now we need to calculate N. So go to N and click on the button solve. And you will get the answer as 16 years. 16.086, which we can consider as 16 years. So it will take 16 years for 10,000 to become 40. So for your money to become 4 times it is today, it will take 16 years. That's the conclusion to question 4. Here you see the options. You have option B as 16. So in the exam also you will have 4 options. You will be selecting one. Though basics of time value of money don't have an exam, but specialist modules do, and in specialist also the options are 4. You have to select one. That is MCQ based. Let's go on to the Excel sheet solution now. We put all our inputs again. Set can be begin or end. We need to calculate the N per, so skip that. Return is given as 9%. PV is minus 10,000. Don't forget the minus sign. If you forget the minus sign, you will not get the answer. PMT 0, FV 40. Go to N per, click on equal to. The formula is N per. The formula is N per. So equal to N per, double click, select the rate first, comma, select the PMT, select the PV as they state, then FV. You don't need to remember it in the exam that what you have to select after which particular cell. In exam also you will have the formula in front of you. So just go by the formula. That's it. Right? That's not difficult. comma, begin of the period, close the bracket and enter. Select and put a comma after each cell selection. 16 years, that's the same. So it will take 16 years for 10,000 to become 40. Let's say if I don't put a minus sign here, automatically it will show an error, right? Now why do I always tell you to link the cell? Let's say instead of 9%, if the rate was 12, instead of 9, or let's say rate is 10, so your 16 will change. It will become 15 years. So when you change any input, let's say you change 40 to become 50,000. Let's say you want 5 times. Automatically the period will increase to 19 years. Why? Because we've already linked 50,000 in the formula. So our question says 40, but I just wanted to show you why do we link cells. Because if there will be a lot of steps in one question, if you have to do 3-4 steps, right? This is only one step. If you have to do 3-4 steps, linking things will become very easy. If you link the cells, solution is very easy. So that's how we have calculated question 4. Now we are going to go ahead and solve the question number 5. You all can try solving question 5. You all can pause and try and solve question 5. That would again give you a little more confidence. So you all can pause and you all can solve question 5 if you want. But then resume back and listen to my solution now. Bearvey expects to receive 10,000 from a trust fund in dash years time. So we again have to calculate period. If the current value of the fund is 6,663 and earns 7%. So current value of the fund is 663. So that means it is what? PVFV? PV. So let's go back. Question 5. We have to calculate the N again. The present value is 6663. The current value is 6,663. And it will become, or Bearvey will receive 10,000. We have to calculate when will Bearvey receive 10,000 if the 6,663 today is invested at 7%. So 6663 is invested at 7%. How many years will it take for it to become 10,000? So again we go back to the calci. Set begin or end. We need to calculate the period, so 0. Rate is given as 7%. PV is minus 6,663. PMT 0. Future value is 10,000 as given in the question. P by Y, C by Y 1, we have not discussed it yet. So we'll keep it 1 only. Go to N and click on the button solve. You should get 6 years as the answer. It will take 6 years for your 6,663 to convert into 10,000. Now let's do this in the Excel sheet and then you all can try on your own on both Calci and Excel both. Set can be begin end again as discussed, and we have to calculate. Rate given is 7%. In Excel always put a percentage sign. PV is minus 6,663. PMT 0. Future value is 10,000. Go to N equal to N per is the formula. Rate is what we will select 7%. PMT is 0. Minus 6663 PV. Future value is 10,000, comma. Select begin of the period, close the bracket and enter. Again it's the same 6 years. 6.009 or 1 whatsoever. So 6 years in short is the answer. So 6 years is what it will take for 663 to become 10,000. I hope that's clear to everyone. Let's go on to the next one. So 2 more questions for this video and then we end. So let's read this question 6. Someone promises to give you rupees 5,000 after 10 years in exchange of rupees 1,000 today. What is the interest rate offered to you? Very straight and simple. What is the interest? You have to calculate that. What is the interest that is offered to you? You've calculated PV, FV, N. Now calculate I. What is the interest offered to you if Someone is giving you 5,000 after 10 years. So what is 5,000? 5,000 is received after 10 years. So 5 is your future value in exchange of 1,000 today. So if you are investing 1,000 today, making a timeline for question 6. If you are going to invest 1,000 today, which will become 5,000, that is 5 times after 10 years. What is the rate that is offered to you? Simple. So let's calculate. Set begin or end whatsoever, not discussed yet. N is given to us as 10 years. We need to calculate the rate, so 0. Present value given is minus 1,000 only. We've not discussed PMT yet. Future value given is 5,000. P by Y and C by Y will remain 1 in your calc. Go to your I and click on the solve button in your calculator, please. And you will get the answer as 17.46%. 17% is what it will take. You have to invest at 17.5 almost for your 1,000 to become 5,000. So if you want your money to become 5 times in 10 years, you need to invest at a rate of approximate 17.5%. Now, 17.5 is what you would need. That means that's your I, option B. That's what you will select in the exam. Now let's do it on the Excel sheet. Again, set or type begin or end. N per 10 years. Rate we need to calculate. PV minus 1,000 as given. PMT 0 we've not discussed yet. Future value is 5,000. So go to equal to rate. Go to the rate. Equal to rate is the formula. Equal to rate. You need to calculate the rate. The formula is rate itself. Double click. N per is 10. PMT is 0. PV will be minus 1,000, which is what I've selected. Future value 5,000. And beginning or end, whatever you want to select, you can select that. Let's say beginning, close the bracket and enter. 17.46. The exact same answer is what you will get. So whether you solve it on the Excel sheet or calc, you should get the same answer. I hope that's clear to everyone. Please pause and solve this question on calc and Excel both. Now we are going to solve question 7. But before I solve, again pause and try it by yourself. Once you've tried, look at ABCD, what is the option that you've gotten, and then resume again and see how we are going to solve it further. Okay? So pause and try and solving, and then resume, and this is what you will hear. Question 7. The IDBI deep discount bond offers an investor rupees 50,000 after 20 years. So after 20 years, you will get 50,000. That's it, it's the future value. For an initial investment of 9,500. So today I'm investing 9,500 as my PV. That will become 50,000 in 20 years. The interest rate implied in the offer is how much? How much is the rate offered? So the same thing is asked. We need to calculate the rate. In 20 years, if you invest 9,500 today, and if that 9,500 becomes 50 after 20 years, what is the rate offered to you? So again in the calc, same logic. Let's just put all the input. Set can be begin or end. Whatever it is, let that be. End, if it is end already in your calc, let it be end. If it's begin in your calc, let it be begin. What is the N? 20 years. Do we have the rate? We need to calculate it. What's the PV? Minus 9,500. PMT will be 0. We need to calculate the future value. No, it's already given, which is 50,000. P by Y1, C by Y1 as discussed. Go to the rate and click on the button solve. And we will get the answer as 8.658. 8.658. So if we invest for 20 years at a rate of 8.5% almost, if we invest 9,500, that will become 50,000 in 20 years time. So you can target a rate of 8.5%. There are plenty of instruments that provide you that rate, by the way. But you will learn about the instruments, the investment products, assets, all of that in the investment planning module, where we'll discuss different type of products and strategies. And that's one of the most interesting modules, by the way. Now let's go to the Excel sheet solution. Set, again, begin, end, whatever is okay. N per is 20 as given. We need to calculate the rate. So 0. PV is given minus 9,500. We need to calculate the rate. Future value given is 50,000. Equal to rate is the formula. Period is 20. PMT is 0. Present value is minus 9,500, which I'm selecting. Future value 50,000. End or begin. See, whatever you want to take. We've already discussed that. Close the bracket and enter. And you get 8.658 as your answer. So if you invest 9,500 at 8.5% or more, you will get 50,000 after 20 years from today. That's the conclusion of the entire timeline. So in the exam, again, you are given around 4 options and you select 8.65, which is the option A. That's it for the basics of PV, FV, N and I. In the next video, we are going to discuss further about set, about PMT, P by Y, C by Y, and it's going to be very interesting.
Hi everyone. I'm sure you are enjoying the free course of Financial Math. Each video will teach you something new and important. Now, if these concepts genuinely interest you and you want to go deeper and build a career in personal finance, there's one qualification you should definitely explore, which is CFP. CFP stands for Certified Financial Planner. It's an internationally recognized qualification which is accepted in 27 countries globally. And what do you learn from that? Everything that actually matters in real life finance. Financial markets, investment planning, tax planning, insurance, estate, practical client handling skills. CFP will also open doors for you for various career opportunities for roles like financial planner, wealth manager, portfolio manager, financial analyst. And these opportunities are available in wealth management companies, banks, MNCs, AMCs. By the way, not only that, you can also become an entrepreneur, have your own financial planning boutique and practice in finance. If this sounds like the direction you want to move in, reach out on this contact and we'll help you understand whether CFP is the right fit for you. Thank you.